All right, we got some people trickling in here. Welcome, everybody. This is our December edition of the AI Circle. As you guys probably know, there's something called Christmas in a few weeks. So, this is actually going to be our only AI Circle for the month. So, we want to get right to it, get Kelly in here. We'll get the disclaimer out of the way in a little bit. But some things are changing. We're kind of modifying AI Circle and Mailbag. So, I will jump into that in a second. But first, got to introduce the man of the hour, Mr. Kelly Korshak. Kelly, how you doing?
Tiredly. It's
Long
Christmas
week already.
always Christmas always does that to everyone. For some
Yeah.
reason, I feel the joy, but I feel the fatigue.
Oh, 100%. I hear you. It feels like Friday already, but that's all right. So I brought up some changes. I kind of talked to Kelly about this before, also with Aaron, who you guys I'm sure all remember as the host of the AI Circle. What we're gonna do just in brief is we're going to kind of merge the AI Circle and Mailbag. So instead of Kelly spending a half hour or so on his market updates twice a month, we're actually going to do that in 15 minutes and then leave the other 15 minutes to talk more specifically about smart folios, even opportunities for Q&A, so that, I guess I might be able to answer some questions, but obviously a lot of you guys want Kelly to answer some as well. So we're going to try that, and feel free to give us feedback on it as well. I think this will be much better use of our half hour, especially with our customer base, and getting a little bit more value out of it, but I could be wrong. So, Kelly, I'm going to get to the disclaimer here in a second. Anything you want to say before that?
No, let's get to it.
All
So,
right.
the disclaimer.
Yeah, everyone's favorite part. So, iFlip Investor Inc. and iFlip Financial Services are not financial advisors, and we do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak to your CPA or financial representative to ensure the iFlip Smartfolios that you're selecting are suitable for your investment profile before trading in a live brokerage account. Kelly, we got the best part out of the way. What do you have to tell us about
All
the
right.
market?
We're good to go. All right, everybody. So, again, the format will be a little different. We're going to spend the first half of this today just doing a market regurgitate. And then the second half, we will start discussing 2024 portfolios. And Lee will throw some questions at me that'll be similar to the ones you might ask about, what should we be thinking about in 2024?
Yeah. And sorry to interrupt you. And so feel free in the chat if you guys have any questions. We might get to them tonight, we might not. But the purpose of this moving forward is so that you guys get more of your questions answered. I know I see some periodically in the chat, and this is kind of your time to be engaged and get answers to things that you guys want. So whether it's something that Kelly says about the markets, or if you have something more iFlip specific to ask, feel free to put that in the chat. And then the last thing is we're also changing a little bit of the trivia questions. So Kelly's been stumping you guys a lot, and me included on that. So we're actually going to pick the best question that's asked as our winner for the trivia question. So we won't do that tonight. We do have our last trivia question, but moving forward, we will pivot that towards basically rewarding you guys for being engaged and having good questions. So Kelly, the reins are back to you, and I will share your screen. Sorry to interrupt.
No worries at all. We need to get the thing going. So make sure to put out there a question. So let's talk about the market. First of all, today, it is official, folks. The Federal Reserve already signaled today, and the market exploded on the Dow Jones 500 points higher, knowing that the Federal Reserve will cut interest rates in 2024, we think up to 3 times. So if we assume each of those are 0.25%, that means that we should be, by the end of 2024, we should be down at least 75 basis points, if not some more. So right now, the Fed funds rate stands at 5.25, and we know, based on what the Federal Reserve has told us, and the data implies that we should be at best 4.5% sometime by the end of 2024, a year from now. Probably maybe another cut in there as well down to 4.25%. What does that mean? Well, it means two things. Well, for today, it meant when that news came out, the market exploded higher and it was up flat, waiting for the information, and the market moved up 1.4% on the Dow. Let's move over to the NASDAQ. It was up 1.27%. And the S&P, of course, was up 1.37%. Notice something here, folks, that we are coming from in literally 1 month, actually call it 1.5 months now, from the lows of January, where the market looks like it was going to bend over and break. The Dow Jones was actually down on the year. Let's go to the Dow. It was down at almost 2 standard deviations lower, down on the year. And lo and behold, look, the explosion was complete. As of Darth Vader saying, failure is complete. The market has exploded literally almost 4,500 points. That is the largest rally I have ever seen in my career. And especially from these prices, these nominal levels make it all the more exciting, I suppose. I don't like it. That's me. I understand interest rates are going lower. I understand that is beneficial to a stock market. However, when you see this kind of a move this fast, there's always some element of me that believes there will be a reversion trade in the future. That'll bring me to actually part of today's question, or our trivia question for the day, the January effect. Going into that, though, we are now sitting literally almost 3 standard deviations above a 200-day moving average on the Dow. Generally, when this occurs, which, by the way, I've only seen one other time historically, the market does retreat. However, we are in the Santa Claus mode. It's very light volume. Very few people are putting these trades on. And so we don't really know if this is true price. That'll be determined, I think, between now and the end of the year. So some of the other things to note that are very important, look at the dollar. The dollar actually had been getting it's been getting weaker since November, which is why the stock market went up. It started to rally and it's still there. The dollar didn't move much today, very nominal day. Look at interest rates, the 10-year note. When the news came out, of course, the 10-year note rallied in price, which means the interest rates went down. And if the interest rates go down, that means that the price of a bond goes up. And it was up significantly, also 1.2%, as you can see right here. The Wilshire 5000, however, had a much more mooted rally today. Again, the broader stock market is not quite participating like the very narrow index, which is the Dow, which, by the way, is very tech heavy at this point. So again, the Dow is not a good index. The S&P still remains the index. And it too has hit an upper standard deviation, literally from being down 1 standard deviation. It has now hit 2 standard deviations higher above a 200-day moving average, again, signaling reversion. Let's go to some of the Magnificent Seven. Look across the board. Apple. I think that is a new high, barely, by maybe a couple of cents. Amazon, by a couple of cents. Google, nowhere near. It's still lingering off its highs that it made earlier in October. Meta, almost a new high. Microsoft, off of its 200-day move, 2 deviations above a 200-day moving average, almost always some reversion. Netflix, basically a new high. It's right there. Here's the old one. Here's where the price is today. It's hard to see, but let's make it a little bigger. There it is. Call it on the highs. Nvidia, the stock that's supposed to be 650 with huge earnings, trading 150 times with huge capacity, trading 150 times earnings, remains at 480. I still feel this stock is more likely to be at 350 than it is to be at even 500. Tesla. Well, Tesla didn't really move that much today. Up 1%, of course, but remember, folks, we did see a $400 high last year, and then it gave that up. So we're really trading almost half the value of it was before, yet in this incredible year, and actually incredible last 45 days. The banking stocks, I think we should keep the note of many times people were feared. Bank of America, even though it's much lower than pre-COVID, it's closing in on its highest. It's certainly at or close to its highest levels on the year. JP Morgan on its highest levels of the year. Goldman Sachs, a magnificent rally from 2 standard deviation below to literally almost more than 2 standard deviations above, literally again in 45 days. The last time you see these, when you see things like this happen, folks, these huge moves over a wide span, look, there's always a reversion. Here we had a large move up above 2 standard deviations, and then of course it gave back almost 40% of this rally. Same thing, whenever you see these large moves like this, something is going to be given up for profit taking. Let's look at real quick the oil companies. Now we know oil is now below $70 a barrel. I think we all feel that in America, thankfully, where we don't have to pay as much to fill up our tanks. But Exxon is still just $1 below 100. It came off of its highs at about 120. Yes, it means it's down about 20%, but oil, keep that in mind, it was down from about 94. Oil is down about 30%. Going through it, the pipeline stocks, which have been very favorable, even though the oil prices are down, these pipeline stocks just will not give up. And the good news is, for those people that have it, which I hope most of you do, we're still, 50 cents off of their all-time highs. Not all-time highs over the last 2-year period. This is also true with All Plains American. We're still 16 was the high. We're only $1 off the high. And so these stocks are hanging in. Let's take a look at the cruise lines real quick, just as a go-getter. They're closer to the highs on the year, which is good. I would hang on to those in this economy. And finally, some of the less carrying markets like AT&T, nothing special. They have moved to the middle of their ranges. And so has let's take a look. Let's move real quick over to Bitcoin. You cannot deny this. Not too long ago, we were trading at 40,000. Let's get to the actual Bitcoin price. Where are the cryptos? Right here. So guess what, folks? We are up another 1,500 points today. The highs we hit over the weekend were about 45,000. We're at 43,000 right now. Just literally a 9-iron away from new highs. And so again, Bitcoin looks fundamentally extremely strong, and I suspect that is the one thing that will definitely do well in 2024. Now we're kind of coming to a spot here where we want to talk about maybe just a couple more things as we go into questions about our smart folios for 2024. There will be some new smart folios in 2024. And as usual, the balanced, conservative, and almost all of our portfolios will be modified internally. There may be no reason to change your portfolios, but you will want to have a look. And our first session of 2024 of the AA Circle will actually highlight some of the new portfolios that will be built and some of the changes to the core portfolios we have, which are the conservative, balanced, and aggressive. So some of these things actually will try to include, as the year progresses, some element of crypto, just so we have some little bit of a hedge in there, perhaps, and also some focus on interest rates. If we know interest rates are going to go a little bit lower, at least the Fed mandates it, it's probably wise to own some of those kind of things that will participate in perhaps a further rally in the interest rate environment. Let's not get out of our bed here and start thinking that the world is great just because of these rallies. Again, I'm very suspect of the market. And I'm going to go into a couple of things before we switch over to questions from Lee regarding those Smartfolio changes and updates and new ones that we will be building. At the end of the day, we have seen a market that really is so focused on interest rates that it is, if it wants to just eat that. It is like a person that will just eat meat and forget that if you don't eat some vegetables, you're likely to be out of balance and get sick. The market is focused on interest rates right now. Somehow it is overlooking, and this is what the markets do, frankly, quite frequently, as they climb their walls of worries. They forget about the problems that are out there. One of the major problems out there is still credit card debt. That's one of the reasons that the AI is just having trouble believing in this market. Credit card debt is at all-time highs, 1.4 trillion as we speak. That is the largest credit card debt we've ever had as a country by double. We are now in kind of new territory, let's face it. We also know that Americans, 70% of them are living paycheck to paycheck. Any ripple to this economy could be dangerous. We do have two wars going on. War is generally good for the stock market. God knows America's been at war for about 70 years since the Korean War. We are always meddling around the world, looking to sell our armaments to those who need them or want them, and those that ultimately get them. That helps the economy grow at some level, and there is no doubt of it. However, that being said, even with a lower interest rate environment, which remains to be seen, we must understand that there is underlying problems in the country. We all know what they are, and even should they be fixed, doesn't mean that these problems won't come home to roost. And by the way, I'm not talking about the national debt. I remember in the 1980s, Ronald Reagan was constantly being challenged on his trickle-down economics, that the debt would be the plate of crow, Walter Mondale would say to him, that he would eat one day. He never ate that meal. The market rallied through the Reagan administration and in deep and even heavier through the Clinton administration. But we are now talking about personal debt, which is at all-time highs, and in personal savings, which, by the way, is at all-time lows. Something will break. And when it breaks, there is much to be concerned about. The reason we're at iFlip, everyone, should be that we understand that we have to be in the market, fine. But if the market decides not to go higher, we must understand that it's okay to be out of the market and wait for better pricing. So that being said, that is the mantra of this business. It is a long-run business. We are an investment company. We offer investment-grade products. We do not make calls on the market. I can opine as much as I want, and I could be right, I could be wrong, but it should make no difference. That being said, Lee, let's talk some about the smartfolios.
Yeah, this was not necessarily related directly to a smartfolio, but you brought up all the banking stocks. Knowing a little bit about, how they make money in the lending side of things, it seems odd to me that they, today announced rates are going to go down and all those banking stocks you showed skyrocketed.
They didn't skyrocket, but they definitely went up. And what happens is when you throw a rock in a pond, the ripples go through the whole pond. It is a different magnitude the further they get away. Today was an up day, and it dragged all stocks higher. All stocks got dragged higher. People were enthusiastic. They were buying. Buy program comes into a market, which is how it happens today. It's not like investors buy anymore.
Right.
It's mutual funds and ETFs that buy. And when they buy, they have a weight to their portfolios. Some of their purchases will be towards those types of stocks. That's why they rallied today. Even though you're right, if interest rates go lower, the bank's ability to make money tightens.
Sure.
And so there's other factors that say, well, no, if the interest rates go lower, it expands the economy and the banks will be able to make more loans, even at a lower rate. That will remain to be seen. Remember, they just announced it. They haven't done it.
Sure.
So we will see how that plays out for the banking sector for 2024.
Makes sense. A couple good questions already in the chat. One leads me to believe that we have some newer folks that don't know a ton about us yet. So, my question is going to be about the smart folios, but I want to preface it by talking about the core strategies of the core smart folios. So, like a lot of other places, we have what we call our core. Maybe they don't call them core strategies, but we have your conservative, your balanced, and your aggressive option. I feel like most people have an idea. They might not know exactly what they want to invest into, but aggressive or conservative they might want to be. A lot of times people will talk about like a risk appetite. So those are the three I'm going to spend a little bit of time on right now. I guess my question for you to opine on would be on those three. What do you, maybe starting say Q1? You don't have to project the whole year, but what do you expect out of those early on in Q1 of 2024?
Well, there's a lot to be answered there. We should unpack some of that
Sure.
question, Lee. The right now, the market has already been told what the interest rate environment will be like in 2024. Just like in 2021, we were told what the interest rate environment would be for 2022. What happened? Well, in 2022, the market in January went down and it stayed down throughout the year. It finally started to rally in October of 2022. In 2023, the market opened higher in January and then basically languished its way throughout the year until literally the beginning of November, 45 days ago. And that's because it now has this new appetite that interest rates will be coming to their plate. Lower interest rates will be coming to their dinner table. And so, what does that mean for smart folios? For January, is the question out there for the trivia today?
Yep.
The January is a very important month in the sense that if you look historically, I might even be answering our question this week here.
All right.
But the issue really is January. If in January the market is stronger, most of the time, which meaning statistically over 65% of the time, the market will be higher that year. It might be no higher than it was in January, but it will be higher. If you have an up January, generally you're up. If you have a down January, generally you're down. It sets the stage.
So there's some correlation there.
There's actually a very profound correlation there. I mean, if it's 65% of the time, if you take it over enough time, it actually becomes the correlation.
Sure.
So the thinking is that we're already absorbing a lot of what is going to happen next year has been told to us in the last by the market itself over the way it's behaved over the last 45 days. So when we unpack our three main strategies, the conservative, meaning the least risky, to the aggressive, the most risky, if we have the preponderance that lower interest rates will yield new highs in the stock market this year, then in the early part of the year, I would probably be in the aggressive portfolios. And then I would probably switch over to conservative portfolios. However, generally, it's not for people to click something or choose something and then as the market goes, as the year goes by, keep changing it. That's not
Right.
what we're about.
No.
No manager does that. The idea is to stick with the strategy over a period. Dividend strategies may be unwound a little bit in 2024 because if there's lower interest rates, we can now find that we may not get the dividends that we got in 2023, which have been very powerful. So I think the way I look at it as it stands today, I would probably be more inclined to have the balanced portfolio for 2024. But I would be also inclined to wait to see how January unfolds before I made any changes. And to add to that, most of our new portfolios will not come out literally on January 1st. They will be put in as January unfolds.
Sure. So we have two questions from Francisco, and they're correlated to each other. One says, "Are we going to get a correction?" And then the other was more specific, saying, "Will there be a pullback in the S&P in January?" Which I think is a fair question based on you're saying that's gonna tell us how the market's gonna potentially do in 2024.
By the way, that is Francisco. I can tell you that is exactly what's on my mind, and that is one of the reasons why when I aim, I'm actually able to aim the machine learning in such a way to be able to not anticipate what stocks I should own or how I should own them, but I am able to try to make an aim to be able to say that what kind of interest rate environment we can expect for the year and how I should invest for that year. So I'm actually running simulations now to see what we should do if there is a pullback in January. So I agree with you. I actually do feel that if we don't pull back before the end of the year, there will be a pullback in January. And by the way, don't forget what I said before. If we do pull back in January, that could start something that's negative. In other words, all the joy we feel right now before Christmas could deflate very quickly if we pull back in January. And if you can see the chart up here, I'm going to put up the S&P again. Right here. It sure looks to me that there's a high probability. We're only 100 points off the all-time highs in the S&P. It seems to me that it's very likely we could pull back at some point in January, maybe through the middle of February, where we will have a much better choice to make is how we want to be leaning for the remainder of 2024. So I would encourage people to do nothing right now and then start to re-examine things as January progresses. You know, towards the middle to the end of January, early February, I think is the better time to take a look at this. After all, the markets are at almost new highs now. And it will be a much easier choice to make if we do pull back a little bit. The market has gone up so much that it is hard for someone like myself to opine that we're just going to watch it continue to roll on.
Sure. Yeah, and for those that are newer, when Kelly's talking about switching portfolios or, starting with aggressive and getting to conservative later on and why that's a bad idea, obviously we can't tell you as advice it's a terrible idea or anything like that. But basically what you're doing when you use our platform, our AI is actually determining when you should get in and out of certain positions. So when you say conservative, it's investing into more maybe stable or dividend producing type companies that if the market does correct, they're not going to take as big of a hit, I guess, as something more aggressive. But what we don't want to do is be changing your portfolio all the time, because then you're overriding what the AI is trying to do for you.
At some level, yes, you're overriding sticking to a theme. Even regardless of which portfolio you choose, there is machine learning that is actually managing the positions in it.
Right.
But the difference is you're actually changing between your risk tolerance.
Sure.
And also by changing your risk tolerance, you're making a different bet on the market. If I want to take aggressive, I'm basically betting that the market is going to go up.
Right. And
when I'm taking the conservative, I'm basically making the bet that I hope the market goes up, but if it doesn't, I'm not going to lose as much if it goes down. And I might even have a chance to make some money, because conservative things generally try to focus on dividends.
Sure.
And so don't change your portfolios. Let the machine change them internally for you. They are designed that way.
Absolutely.
And finally, another thing is I will tell everyone that I was on a seminar earlier and a conference even before that. And a lot of the data, not just the data I mentioned with credit card debt or consumers living paycheck to paycheck, I've seen quite a bit of data that is suggesting that we're actually more in a time where kind of being less aggressive is probably a wiser thing over 2024. Remember, it is an election year.
Absolutely.
And even if interest rates do come down, election years, especially this one, given the dichotomy of the political environment that exists today, there could be a lot of volatility. And if there's a lot of volatility, again, I prefer to lean conservative and let it weather out. The markets, frankly, have been way too volatile in my mind. That when you see a market do everything in a month that it was trying to do in a year, that does create problems.
Certainly. I'm going to put the trivia question up here. As Kelly said, if you guys are paying attention, I think you're going to get it pretty quickly. It's a little bit different than what we normally ask about, where it's usually, like a cut and dry number or something like that. But with that being said, our trivia question is, what is the January effect? Kelly, I'm going to have you pick the winner. So the first one that you see that is acceptable in your eyes, we're going to go with that one. In the meantime, there were a couple other questions that we didn't get to, and I want to actually answer those with Aaron on our mailbag show next week. So, D Smalls, we'll get to both of your questions about Start Engine and then any potential for those shares being traded publicly in the future. And then I believe your name is Jameson. How does iFlip work versus or compared to Coinbase? We can also answer that next week as well. I know Kelly and I have had a long day, and we're trying not to keep you guys too long, but there's been some great engagement, and we want to thank you guys all for joining. So let's see.
Thank you, Kamal.
If we have any answers yet. Some fascinating comments. Yeah.
I'm going to put the Jeopardy music on. Jeopardy music is on. Ding, 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 ding.
Do you see any that you like yet, Kelly?
I do. I see the top one by Jameson is the correct answer.
I think we're going to lock that in. Jameson, you didn't get your question answered tonight, but you did win our trivia question. So I think that's got to be some sort of consolation prize. Is there anything else, Kelly? I know you didn't necessarily want to give the answer away. Is there anything else you wanted to add to what the January effect is outside of what's already been said?
I would encourage people to take a look. That there's a strategy actually to say that if January is up, invest in February, and then sell at the end of the year, and do it and repeat that strategy. This year, it would have worked, but you would have been underwater all year prior to November. So November and what's happened so far in December has bailed you out and bailed out the actual statistics of the January effect. As January goes, so does the market, is the real answer. Absolutely. And so thank you, Jameson, for that one. If you look back in history, you will actually, it's very easy to see. And it's something that most market participants really pay attention to. So the first week of January, the first few weeks of January are very, very important. So this is going to be very, I'm looking forward to the first AI Circle session in the month of January to start this process and see what the new products and the way the portfolios have updated for 2024. And we will define that then.
Absolutely. So, Jameson, like I said, you are our winner tonight. All we need you to do is email mailbag@iflipinvest.com, or you can even text our 480-418-0575 number. All we need from you is proof that you're in a smartfolio. Unfortunately, it's not good enough that you got the question right, but should be pretty simple to do. And once we get that from you, we will send your Amazon gift card your way. So do it sooner rather than later, because I know all those holidays are coming up. And as Aaron likes to say, Amazon gift cards as good as cash. And there were other couple questions we didn't get to tonight. We will absolutely do those. Aaron and I will handle those on next Wednesday. And then the last thing, if you guys weren't able to be here right when we started, I did announce there's not going to be a second AI Circle for January. So our next one will be at the start of the new year. So Kelly, anything before we let everyone go?
No, except for this. Thank you, Joe and Becky. Thank you, Mario. Thank you, Kevin Humphrey. Thank you, Kamal. Thank you, Soccer 12s. And thank you, Francisco. And I want to wish happy holidays and Merry Christmas to to everybody out there that I get to speak to. I am so grateful to be a part of iFlip and the team here. And I am even more grateful for all of our customers and members and the people that show up on this AI circle. Again, happy holidays, Merry Christmas, and be well, everyone. Until 2024.
Until 2024, we will see you guys on the flip side of December. So have a great rest of your week. Enjoy the holiday season, and we will see you next week for the mailbag. Take care, everyone.